Hello. Today I want to do a recap of a tweet that we sent out, and I'm going to go over in detail how to take advantage of them. So this morning, sent out a tweet. ES is searching for resistance. 1878.25 R. Anticipated an exhaustive signal. Structure break is tell. And I put this image, this bear trend image, defining the R level, which is 1878.25. This little I is a typo. So the strategy is to fade momentum into the R level, and we're anticipating an exhaustive signal here, and a structure break is going to be the tell that this trend is ready to engage. The analytics behind this tweet come from the JS desktop. We're looking at the S&P March futures. The market state is in a bear trend. We're anticipating a market to perform like a bear trend, make lower move lows, lower move highs, and that's our expectation as long as the market holds structure. Structurally, that high point, that lower high point comes in at 1878.25, and we have what we call our upside pivot at 1868 even. So this kind of becomes a resistance band. And because we're in that state and that structure, the optimal strategy theme is to fade momentum into the R level and then accept what we call a reversal signal, selling the market after it goes above the upside pivot and sell it back down below it. On a hedge strategy theme, if the market opens up below what we call our directional, this 1847.25, that could produce a rally up to the R level, kind of setting up this strategy. So we're in a bear trend, and then we're going to take a look at where last traded price is to identify what the opportunity is. So this tweet was sent out at 7:31 a.m. Central Standard Time. When I sent the tweet out, the market was trading here. So if we look at the price action overnight, you see the market producing a breakout signal above the directional. So this hedge theme, this is a buy DIR breakout hedge strategy theme, and this engaged right at the European opening. And we had a pullback to the figure, and then the market attained a full APMD, average price map distance. Anytime you're going to have a big linear up day, it'll just hold this positive structure and go. So if we're ever in a situation where we want to fade momentum, so we want to fade momentum into the R level, we want to look for a break in structure first. We don't want this to be a very pretty rally. If it's a pretty rally, we need to back off and just wait. We want to wait for that break in structure. And that's why in the tweet we said a structure break will be the tell, and we also want to look for potentially an exhaustive event. Maybe a volume surge, or the market's getting overdone. So those are the tells that we're going to look for to set up this opportunity. But currently what's important to understand is that this market's in this hedge theme, and they actually gave you that trigger here. So we'll move this forward. So this is the action prior to our 9:15 get and go, and we come out and we go into detail of what's happening inside the order book for this opportunity. So what happened before the get and go is we had a break in structure. So this is good news for our fade. It tells us that this momentum is broken. In addition, we're always watching price action within market structure. So these are the main market structure points. So we have our upside pivot, our R level, here's our directional, downside pivot. These are the major structure points of this market state. And then we have some minor structure points. So I'll put those on there. And this helps to show the segment moves the market's trading in. And so as we come into the get and go, we're going to get into what's going on in the order book, because we're looking for opportunities to sell into this resistance. So we have two strategies. One is a sell R fade, the other is a sell UP reversal. And on a reversal strategy, we can use these market metrics as triggers, and we didn't breach this metric on the upside of the upside pivot, so that's a good confirmation for a reversal. So the reversal was not in play. The market did give us a breakdown here and a pullback and a full half APMD. So we're watching price action. It did break price structure, And then here we do get a break in market structure. So this is a market structure level, and we went below that market structure metric. So this is a good tell that any rally is more likely to fail. And the market does this a lot. It'll break structure, and it'll say, okay, this positive momentum is broken. Not only did we break price structure here and here on this move, had our pullback, so this is our first price structure break, and then here's our market structure break. And so those two things discounted this rally. And we know where the main structure point is. We know that 1878 and a quarter is the main structure point. So they had a impulse strike, a failure. Maybe we got a lot of people short here, and now we're getting a pullback set to test the R level. So the market does set up and provides us with a nice rejection at the R level. So I'm going to pull up the order book, and we're going to take a look at how we could have gotten into this trade after the get and go. So the get and go ends at 9:30, and we had the order book all built up, so we could see a real nice resting paper here against the top of the UP. It's always about clarity, and the real clarity is the market couldn't violate this on the upside, and then it didn't give us a really good reversal, and we didn't have that push into this R level. The market could have easily rolled over here as well, but when we came in, it's back here, and it's pushing above this price here. If we're selling the market here, the top of this variance, we know this whole zone is a sell zone, because we're looking for a substantial move from this area. We're looking for potentially the resumption of the bear trend. So the market is here, and we're looking for a move, potentially this bear trend to resume. This is really where you want to put your money at risk. When the market's trading here, you don't want to put that much money at risk. This is where you want to spend your money, because the potential is really big. It may not work, but if it does, you might be set for a big opportunity. And as long as they hold this structure, you want to continue to ride that theme. Sometimes it could be smooth, sometimes it could be choppy. But the key is you want to ride the theme. So we're coming in, we see this resting paper, we see it's still holding up here. It looks like it may just be a dink high at the moment. We want to get in here, but we also want to sell it all the way up. And so then we get into the alert distance. So this matches up here, alert distance. This is the bookmap JS nodes column. So you have your variance, it's the variance, and then it's marked by the alert distance. So here's the alert, top of the alert distance for the upside pivot, bottom of the alert distance for the R level. So that's a good metric to start selling against. So selling it at the alert distance, selling it at the variance. So coming in here again, selling at the variance, and then using the order book to identify, oh, there's resting paper actually through the R level. We try to optimize our last unit in there against that. Then I was setting some stops above the alert distance and spreading them up through the variance and the alert distance. It was actually an error, so I resold it, and then the market pulls off back down to the upside pivot area. So we still have this positive structure here. So we're looking at positive price structure, and we're coming into the top of that zone. So we need to see a break in price structure. So below here, this would be our higher move high, higher move low. We want to see a break in this price structure, and then we want to see a breakdown in market structure. So a failure below here is going to be a good negative signal, and that would confirm that sell UP reversal. So that would confirm this strategy. So we could actually even leverage up even further if we wanted to. So we're talking in units of 3 and 4, getting a little more aggressive and putting on 4 units. So again, the market performs to expectation. Kind of an exciting trade because the market held structure, it held the market structure, and now it broke price structure here. Whenever we're getting to an opportunity, we're always looking for half, full, 2, and even 3 or 4 APMD moves, depends how many units you have on. So since we have a lot on, we are going to look to get out of some of that. And as the market comes down here to the top of the CR plus, it's a good opportunity to anticipate a bounce, and so looking to take some money off the table. But also the fact that we broke underneath this alert distance from the upside pivot puts the sell reversal in play. and so looking to sell against that alert distance, anticipating this aggressive negative selling to continue. We do note that the resting paper is still above here. It's still way up here. This hasn't shifted down yet. We have a little bit of a shift in liquidity here, so it may be starting to shift, and we're just getting a little aggressive in front of that shift. This is a little better view of that action. So we're getting filled here. We do have some dark spaces here. We're aware of that. But again, we're still looking at this as our big sell zone. We're pressing it a little bit, but we're anticipating the market to roll over. If the market does follow through and you take a little bit of money, we kind of just scalp out of this one. You can trade these zones. The market will ping pong off these zones, and you can use the order book to help identify where that'll happen. You can see the order book building up here, so we know that there's some good support here. This market could easily stabilize here and bounce back up to these levels. Ideally we need to have a market structure break underneath the CR plus to really get comfortable with this short position, but we're sticking with our theme. We're not thinking, it's time to buy the market. We're thinking, how can we work our short position? Here we see a liquidity shift down, and so we got a little aggressive after this shift down, and we put another one out. The market gave us a little squeeze back up to this price structure, and we put our full boat back on. So we're selling against this, and we can see the kind of liquidity shifting down. We have a lot of confidence because the market is performing to expectation. Again, always monitoring price action within market structure in the context of the market state and underlying strategy themes. And so we have this underlying strategy theme that we're in, and we're working this negative momentum. And so we're using the order book, and we could see it all lit up. So we're getting aggressive. We know what our risk is. We know what our reward is, and then things start to shift down. Again, just working the trade, taking some money off the table. It comes back down into this variance metric. We have confidence because we anticipate the market to perform textbook, and until it doesn't, that's our story, and we're sticking to it. But we're also working our outs. So as the market's coming to the lower edge of this confluence here, so we have confluence with price and this metric, and we also have the order book built up here, saying that, hey, there's some good support at this level. So being prudent and taking some more money off the table, even though we're looking for a bigger move. So the market breaks market structure here, so this is significant. This is a good tell that we were looking for. Now we're in a bear trend, and we can really look at this high as a good peak, and we've made a new structure low point. So this is a significant tell and gives us a lot more confidence in our position. Doesn't mean we can't rally back up here, and we're aware of that. Actually, we're going to move our stop down on some of our size. Just to keep our position management in line, but we're looking for an event. There's the potential for an event in this market, and we're looking for an event, and we want to be there for it. And we really want to see a failure from the directional to really confirm that event. It may not happen, we may not get it, but we need to play our size like it's going to be there, and just work that position, but have enough units on that you're there for it for that event, if it happens. So the market does bounce off of here, and we get stopped out on one of our trails, and then we're looking to cover some more, anticipating maybe a bigger squeeze. Like to, if it's really going to stay aggressive, it should stay below here, and the market starts to pull back to the CR plus. So here we cover one, and then we see the order book shift down, so we get a little more aggressive at the top of this variance to get back in, and we get squeezed a little bit, get a reaction, and the market pulls up. We're still confident with our position. We don't have a problem with the risk that we're assuming. We actually want to put our full boat back on, and we see the resting paper, and so we're going to put an order in against the upside pivot. And we see the market coming into this variance here. And the paper doesn't get out of the way, and we get filled. We know our metrics, and we can see some resting paper still in line with us, and we do see some support coming in down here. The fact that we're trading up here, we're still negative, but it's starting to take us out of our aggressive sell posture. So as the market pulls back and we see this liquidity shift up, we start to slightly deleverage a little bit. We're still negative. The market, this is still our main peak. They're still holding this market structure variance, so we still have a high confidence in our opportunity. It's just been more of a difficult trade, but we're sticking with that theme. You know, that's our as long as the market's holding structure and this high is valid, that's our story, and we're sticking to it. If they broke structure here, it would shift us into more of a sideways expectation, more sideways within here. But it's still in here, we're still negative, anticipating a play for the direction. So the market's churning here. You know, we see this digestive action. It's still negative, but we're going to. We also see this liquidity shift. So we're getting as aggressive as we can. We want to really trade within these variances and avoid trading in the middle. So we're moving our, a buy order just above this liquidity on top of this variance. So walking through this, we took some money off the table there, and the market starts to move lower, and we see this liquidity shift down. It does build up here, and then we take it out. And so, we're looking to sell against the top of this variance. So we're looking to sell here, and then we used a real tight stop, and the market took us out and stopped us out of that unit. And then as the market pulled back to the top of this zone, we decide to cover some more, anticipating that we might get another push up here to sell, with the liquidity shift down, and it didn't happen. The market just took off and just failed. And then when it broke market structure here and price structure, that was good confirmation the market wanted to go lower. And so we looked to put some more leverage back on. And then the market rolls over and gives us an opportunity. And as we see the order book shift up, we took some money off the table. And then as the market's coming into the late afternoon and we had liquidity building up, we took the balance of our position off because we're not going to hold anything overnight. And it could be a bit of a coin flip as we come into the session close.
So the S&Ps were in a bear trend, and structure was above the market. We had a sell R fade and a sell UP reversal strategy that played out, and we stuck to our theme, an opportunity, and the opportunity was for the potential for this to be the peak of a new leg lower. So keeping in mind, what's the potential? The potential is that this is the top for a move lower. It didn't follow through, but that's what we were positioned for, and we're anticipating the whole time. So the market comes into our optimal area. Typically, if the market was going to fail from this level and just go, we could always sell lower below the directional. That would be a confirmation that it's not going to come back up to the R level. At this point, you're just not sure, and they do this a lot. They give you that squeeze. They start to make the move, give you a little bit of a tell, we're going lower, and then they just jam everybody. But they come right back to the structure point. And so looking at this whole zone as a sell zone, it's fading into that momentum. Even through it, using the order book to identify how far into this alert distance can they go. Knowing our stops are above here. They're above that alert distance on the R level. Market immediately pushes back and gives us a sell reversal signal. So now we confirmed it, and we're able to really leverage up. As the order book shifted up, we lighten up a little bit. We're still anticipating this thing to just go. And so when it pulls back and the order book shifts a little bit, we get a little more aggressive. We don't panic because we're coming right back into our variance. We're just using these minor levels as guides. The major levels are really what we're interested in and where we really want our signal acceptance. The market starts to roll over, getting a little more conservative with where price action is and how what happened earlier, and especially because we had a little bit of a break in structure here. It should have just rolled over, and it didn't. And so then when it pulled back up here, being prudent, getting, stopping some out, and then lightening up. Order book shifts. Is it getting ready? Is this coiling up and getting ready to go? Maybe. So getting back on for a potential push lower. It didn't happen. Not panicking, keeping our position, and then loading the boat up. In effect, this is just one big sell UP reversal setup. with confirmation below the CR plus. At, midday, order book shifted up, lighted up a little bit, but not too much, just getting comfortable. Coming in after 1:30, are we going to have a non-event day and this thing's just going to go linear sideways? We've been in this kind of choppy action. Are we just going to bounce back up here? So just kind of being prudent. And as the market starts to move lower, we get lower price here, getting a little more aggressive. They stop us out. They should have gone. They didn't. So starting to lighten up again, thinking that we're going sideways, but keeping our position, keeping a negative position, keeping the what if position. And then here the market confirms. Yes, we are going lower. Yes, all this was just a prelude to a move. So getting back on the train. The train's happening a little late for us because we're day trading this opportunity. And so starting to take some money off the table and then exiting our position into the close. All we can do is read the price action within the market structure. We don't know when it's going to make its move, but we can work our position to be there for it if it happens. And so here is the whole big setup. This R level is a major area, top of the bear trend potentially. They gave us a lot of different head fakes. They worked. They built a nice top. And then at the end of the session, breaking down to the directional, and then immediately overnight they open up. Here's the next day's price map levels, and they're opening up below the directional. So this is a fresh negative signal. They're giving us a fresh negative signal below the directional. They give us a retest, and they could kind of continue to hang there, and then they follow through down through yet the prior session's downside pivot, the new session downside pivot. We take it out, we break out to the downside, and we resume the bear trend. And this is all prior to the session's regular trading session. You had the move overnight. This happens a lot. It's just a function of what it is. Depends what your risk is, if you're going to take positions home overnight or not. Sometimes these happen overnight, sometimes they happen during the day. But the important thing is that you have to be there for it. You have to stick with the theme, be tenacious, work it, don't get turned around, focus on the facts. For more information, please visit us at jsservices.trade. You can follow us on Twitter at JSServices. And also, please feel free to send any questions to info@jsservices.com. Thank you. I look forward to working with you.